everyone, and welcome back to Money, Finance, Wealth. Today we're talking about something that's essential, but too often overlooked: financial planning. But not just any planning. Planning tailored to your stage of life. Before we dive in, if you're new here, please hit that like button, subscribe to the channel, and ring the notification bell so you never miss out on our in-depth guides to mastering your finances. We're all about providing you with the knowledge you need to build a secure financial future. Financial planning isn't a one-size-fits-all activity. Your needs, goals, and priorities change dramatically throughout your life. What works in your 20s won't necessarily work in your 40s or 60s. This video will provide a comprehensive guide to creating a financial plan that adapts to each stage of your life, from building a foundation in your early career to enjoying a comfortable retirement. We'll cover practical steps, key considerations, and common pitfalls to avoid, ensuring you're financially prepared for whatever life throws your way. Before we jump into specifics, let's understand why a flexible life stage approach is so important. Evolving priorities. Your financial priorities shift as you move through life. In your 20s, it might be paying off student loans. In your 30s, it might be buying a home and starting a family. In your 50s, it's likely maximizing retirement savings and planning for long-term care. A static financial plan can become obsolete quickly. Changing income and expenses. Your income typically increases as you gain experience and advance in your career. But so do your expenses. As your life stage changes, so too do your expenses. Childcare, mortgage payments, college tuition, and healthcare costs can fluctuate. A dynamic plan adapts to these changing financial realities. Risk tolerance adjustments. Your risk tolerance changes over time. Younger investors can generally afford to take on more risk, while those nearing retirement typically prefer a more conservative approach. A good financial plan accounts for these shifts in risk tolerance. Maximizing opportunities. Each life stage presents unique financial opportunities. For example, in your 20s, you have the power of compounding on your side. In your 50s, you may have opportunities for catch-up contributions to retirement accounts. A tailored plan helps you capitalize on these opportunities. Unexpected life events. Life throws curveballs. Job loss, illness, divorce, or the birth of a child can significantly impact your finances. A well-designed financial plan incorporates contingency plans for these unexpected events. Your 20s are about laying the groundwork for future financial success. Establish a budget and track expenses. Understand where your money is going. Use budgeting apps, spreadsheets, or the envelope system to track your spending. Make sure that your expenses are much lower than your income to allow for more saving and growth. Pay off high-interest debt. Focus on aggressively paying off high-interest debt, such as credit cards. Use the debt avalanche or snowball method. Build an emergency fund. Aim to save at least 3 to 6 months' worth of living expenses in a liquid, easily accessible account. This provides a safety net for unexpected expenses. Start saving for retirement. It may seem early, but starting to save for retirement in your 20s is one of the smartest financial moves you can make. Take advantage of the power of compounding. Even small contributions can grow significantly over time. Tip: look into Roth IRA if possible. Invest early and often. Start investing in a diversified portfolio of stocks and bonds. Take advantage of tax-advantaged accounts, such as 401(k)s and IRAs. Learn about personal finance. Educate yourself about personal finance topics, such as budgeting, saving, investing, and debt management. Set SMART goals. Define clear financial goals, such as paying off student loans, saving for a down payment, or building a retirement nest egg. Your 30s are often a period of significant life changes, including career advancement, home ownership, and starting a family. Focus on advancing your career and increasing your income. Negotiate raises, pursue promotions, or explore side hustles. If homeownership is a priority, carefully assess your affordability and financial readiness before buying a home. Keep home costs to less than 30% of your income. If you plan to have children, factor in the costs of childcare, education, and other family-related expenses. Make sure you have adequate health, life, and disability insurance to protect yourself and your family. If you don't already have a will, create one. If you do, update it to reflect any changes in your family situation. Aim to increase your retirement savings as your income grows. Max out your 401k contributions and contribute to an IRA. Explore strategies for paying down your mortgage faster, such as making extra payments or refinancing to a shorter-term loan. Your 40s are a crucial decade for maximizing your savings and preparing for the future. Take stock of your financial situation and assess your progress towards your goals. If you're behind on your retirement savings, make catch-up contributions to your 401k or IRA. If you have children, start saving for their college education using a 529 plan or other college savings vehicle. Continue paying down debt, especially high-interest debt. Make sure your investment strategy is aligned with your risk tolerance and time horizon. Start planning for potential long-term care expenses. Consider purchasing long-term care insurance or exploring other options. Review and update your estate plan, including your will, trusts, and beneficiary designations. Your 50s are about preparing for retirement and fine-tuning your financial plan. Estimate how much money you'll need to cover your expenses in retirement. Determine if you're on track to meet your retirement goals. If you're considering downsizing, take stock of whether or not you really need that 5-bedroom house. If your children have moved out, consider moving to a smaller location. Take advantage of catch-up contributions to your 401k or IRA to boost your retirement savings. Consolidate your accounts and investments to simplify your financial life. If you haven't already done so, consider consulting with a qualified financial advisor to help you develop a personalized retirement plan. Think about a medical plan. Health costs tend to increase later in life. Therefore, plan ahead and anticipate it. Retirement is about enjoying the fruits of your labor. Create a retirement income plan. Develop a sustainable withdrawal strategy to ensure your savings last throughout your retirement. Manage your taxes. Understand the tax implications of your retirement income sources and manage your taxes accordingly. Stay active and engaged. Maintain an active and fulfilling lifestyle to stay healthy and happy in retirement. Review and adjust your plan regularly. Regularly review your financial plan and make adjustments as needed to adapt to changes in your circumstances. Consider long-term care. Consider your needs for long-term care. Since health problems may arise later in life, be prepared. Connect with a financial advisor. Now more than ever, this can be helpful for your financial planning needs. Throughout all life stages, avoid these common pitfalls. Not having a budget, failing to track your spending and stick to a budget, carrying high-interest debt, accumulating and carrying high-interest debt, not saving enough for retirement, underestimating how much you'll need for retirement, investing too conservatively or too aggressively, choosing an investment strategy that's not aligned with your risk tolerance or time horizon, not having adequate insurance, being underinsured, leaving yourself vulnerable to financial ruin in case of unexpected events, ignoring estate planning, failing to plan for the transfer of your assets after your death, procrastinating, delaying financial planning until it's too late, not seeking professional help, trying to do everything yourself without seeking guidance from qualified professionals. A financial advisor can provide valuable guidance and support throughout your financial journey. Personalized financial plan. A financial advisor can help you develop a personalized financial plan that meets your specific needs and goals. Investment management. A financial advisor can help you manage your investments and make informed decisions about asset allocation. Retirement planning. A financial advisor can help you plan for retirement, estimate your expenses, and develop a sustainable withdrawal strategy. Tax planning. A financial advisor can help you minimize your taxes and maximize your tax-advantaged savings. Insurance planning. A financial advisor can help you assess your insurance needs and choose the right policies to protect yourself and your family. Estate planning. A financial advisor can work with an estate planning attorney to help you develop an estate plan that minimizes estate taxes and ensures your assets are transferred to your heirs according to your wishes. Financial planning is a lifelong journey that requires ongoing attention and adjustments. By creating a financial plan that adapts to each stage of your life, you can increase your chances of achieving your financial goals and enjoying a secure and fulfilling future. Speaking of guidance, we'd like to thank Finol Wealth Management for sponsoring this video. If you're looking for personalized financial advice and wealth management solutions, their team can help you navigate the complexities of financial planning and